Once you have the login, they will give you the password and everything to go in, so you can see the subjects and go into any topic, choose a topic, and then have a look what's in there. E-learning is there, green light tests, select practice assessments. All these items are there. We look at the e-learning and we look at the bookkeeping terminal. You'll be accessing this.
Okay.
That's where the 2-question past papers there as well. So before the exam, you can go and practice yourself, time yourself. It'll be like a real exam, and then it'll give you the results straight away as well.
Okay.
And also there are a lot of practices there as well. E-learning topics are there. If you want to revisit, you can go and revisit and study yourself at home online. Yeah.
Yep.
So you were able to see my screen. We got some words in there on the introduction page: assets, liabilities, income, expenses, profit or loss, cash and credit sales, cash and credit purchases. So do you know what assets means?
Yes.
So you heard about that before, yeah? Assets
Yeah.
mean any assets, valuables a company owns will be called assets. Another word for similarly assets, but stocks. You have stocks. Companies have stocks, but they are not assets. They are stocks they are buying to resell it. Like Morrison's, they have stocks to resell it. They are called stocks. Yeah. Assets means if they have the furnitures, like the till operating systems, they are called assets. Or if they have delivery vehicles, they will be called assets. The building and the land, the buildings are there, those are called assets.
It's kind of like a belonging, so it actually belongs at the moment to the company.
It's belong to the company, not for selling. Yeah. So they use these assets to make the sales happen, but they buy stocks to resell it. Right? Assets means they have that to run the business. Okay? Motor vehicles, computer equipments, land and buildings, machineries. If you have factories, we need to buy big machineries. They are very expensive, so they are called assets. Liabilities. If you have assets, we can sell it and get money, right? Similarly, we will have liabilities. Liabilities means we owe to other companies. So when we are buying stuff from other companies, or could be assets we are buying, or we could be buying stocks, then we are liable to pay that money. Yeah. So that'll be liabilities. Or if you are running the business for a while, government will be asking for tax. So there'll be tax liabilities. Or if you are employing some people, then you need to pay them money for salaries. So that will be a liability. So these are expenses a business will incur when they are running the business. So they are called liabilities.
So
Next.
in general, it's expenses to run the business.
Sorry?
Expenses to run the business, yeah?
Yes, expenses. It's not the day-to-day expenses like buying and selling. You are buying stuff to sell it. During that process, you'll have incurring expenses. Right? Expenses mean you'll be paying straight away. Liabilities are there, but we need to pay later on.
In a long term. So.
When we are buying on credit, most of the businesses, when they buy item from other companies, we don't need to pay straight away, right? We'll buy on credit and we'll be paying them 30 days later, sometime 60 days later. This depend on the agreement we have with them. So 30 days, for 30 days, it will be liability. You need to pay that debt in 30 days time. Yeah. Next one is income. Income, when we sell something, we get income from by doing the selling, or when we are making something for on a production line and we are selling it and getting income, or it could be services. For example, the college running a course and they gaining some income. It could be healthcare, like hospitals. That's service. They run services. Insurance, they are services. Yeah. So it could be services or products. We sell to get profit and then earning an income from that. So money coming in will be called income. To make that income, we will be spending money on it. So they are called expenses. Yeah, expenses and liabilities are slightly different. Expenses we are incurring while we are making sales. Yeah, liabilities will be bigger, bigger amounts, and then will be paid in later date. So expenses we'll be incurring, like say we are buying item from suppliers and then we keeping it in storage. So we will be paying storage costs, electricity, gas. We need electricity for the storage rooms. Say if you want to temperature control, then we need electricity. Then cleaning costs. And we will be employing some staff to maintain the storage, so there will be expenses for that. So while we making income, we will be incurring some expenses. After all the expenses, we made some income. We made then we spend some money on our business. Excuse me. And then we will have left with some money. That is called profit. Yeah. Not all the time we can make profit. Sometimes if our expenses are higher than the income, then we will be losing money. So that will be called loss. Profit, it could be profit or it could be loss. That's why we're calling it profit and loss. It depends on the businesses. In the initial stages, we may be incurring losses, but once after picking up the sales, we could be making profit. Cash and credit sales. In the accountings, we have two kinds of sales. Cash sales means we pay the money straight away for any sales. We are selling and we getting the money straight away means cash sales. They could be paying the money by credit card or card payment or check. Still, that will be called cash sales because cash coming in straight away. That's why it's called cash sales. Opposite to that is credit sales. Credit sales means we sell some item to customers and they pay us after 30 days or 15 days or 60 days, depend on the agreement we have with them. So credit sales means pay later, sell later, sell now and pay later. That's credit sales. Cash sales means whatever we sell, we get the money straight away. It could be a card payment or check payment, but still that will be called cash sales. Similarly, when we are buying item, if you are paying straight away, that will be cash purchases. If you are paying 30 days later, that will be credit purchases. And most of the businesses are running on credit sales and credit purchases. Occasionally, rarely, sometimes we get cash sales and cash purchases. So Kane works for the pottery shed, an organization that makes and sells pottery. Kane uses bookkeeping terminology in his role at work, we will start by looking at the pottery sets, assets, and liabilities. So we're going to look at the assets and liabilities of this company making pottery, right? The company's name is the Pottery Sheds. So they will be making pots using the clay. They will be making pottery and selling it. Let's see what kind of assets they have. So every organization needs resources to operate. Anything of value that an organization owns is called an asset. Yeah, every organization needs resources to operate. Without resources, it's difficult to operate because we need assets to operate. Anything of a value that an organization owns is called an asset. Yeah, you don't need to write down this, but it's on the AAT website. If you want to refer it back later on, you can always go back in there. Here are some of the pottery sets assets. Can you decide what the pottery sets needs to operate? So they have money in the cash register. Drag and drop words into the right places, then confirm. Yeah. Money in the cash register. So to keep the money in the cash, why we need the money in our tills? That we're gonna choose that. Give changes to customers and pay for small items of expenditures. So you are running a business. Most of the item we buy are on credit, so we buy now and then pay 30 days later. But for small expenses like stamp, we need some stamp, or we need to buy some coffee, then we need some cash. So for that, we will have a cash register in our organization. So in this pottery company, they have a cash register, which is till. Yeah, so they can sell item and get the money from customers. And then they collect the money on the till, and then they deposit all the money into the bank, right? Because we can't keep lots of money in the till. So every day or every week, we transfer that money into our bank account. And we need the money in the bank because when we buy from suppliers, we need to pay them checks or card payments we have to make. So we need the money in our bank. So why money in the bank is to pay for materials and expenses. So when we buy an item from a supplier, we need to pay them 30 days later. Nowadays, most of the payments are done by BACS payment. It's called BACS payment, means online bank transfer. Before it used to be check payments, but nowadays most of the payments are going through bank or online payments. So we need to log into the bank and pay all those suppliers we bought item from. Yeah. Finished goods ready for sale, that are inventory. So we made the potteries and we are ready to sell them. So where are we going to keep that?